Hello, good morning everyone. This is Lin Sin, your consumer and healthcare analyst. Today we will be presenting our company initiation on ThaiBev. Following that, we will be also provide an update on our Singapore strategy based on last week's macro data and company announcement. So without further ado, let's move ahead with our company initiation. So the title for the initiation report is The Dominant and Expensive Giant. For this, for ThaiBev, we have actually breakdown to three key investment theses. The first one would be on we expect 8% per annum earnings growth for the next 5 years, coming from firstly premiumization of its products, secondly from growing share in its Thai beer market, and thirdly it's going to increase its regional footprints in Asian region, mainly focusing on the CMLV market. So CMLV market means Cambodia, Myanmar, Laos, as well as Vietnam. Second point will be on margin expansions, which it will benefit from improving economies of scale and the impending excise tax hike coming soon in September this year. Thirdly, it will be on the corporate restructuring of F&N and FCL by FY17. Do note that they have actually changed their financial year end to September as compared to 2015 where the financial year ended in December. So this corporate restructuring would eventually lead ThaiBev to become the leading total beverage player within the Asian region. And it will also increase the contribution of non-alcoholic beverages to over 50% of the group's revenue. We also identified one potential upside catalyst for ThaiBev. The potential M&A candidate would be Sabeco. This has been a long-standing M&A deal within the Vietnam country. So as you know that Vietnam government is trying to privatize some of its SOEs, which includes Sabeco as well as Vinamilk. As Vinamilk has already progressed on its privatization plan, but Sabeco, we have yet to hear any further progress in the deal. So let's take a look at ThaiBev business overview. As of end of March, ThaiBev has actually 132 companies under its portfolio. This includes sales, marketing, as well as its production companies. To note, there are 3 breweries. So breweries mainly to produce beer. It also has 18 local distilleries and 6 overseas distilleries. So distilleries to produce spirits, which is further divided into brown as well as white spirits. So the 6 overseas distilleries would be 5 in Scotland and 1 in China. It also has 11 manufacturing facilities for NABs, the abbreviation for non-alcoholic beverages. As you know that ThaiBev, the main key reason which brought ThaiBev to become one of the leading beverage player in Thailand is because of its extensive distribution network. This is mainly stemmed from its acquisition in Sumsok back then. Sumsok has a very pervasive distribution network, in particularly in the traditional trade operators, meaning it go deep down into the into distributing to the rural village. So in Thailand, it has over 400,000 points of sale. If you look into the group's operating profit, it can be segregated to two different segments. One will be the core business from ThaiBev, which consists of 86%, and the remaining 14% comes from the Singapore listed associates from FNN as well as FCL. For ThaiBev core product offerings, it will be from spirits, beer, the NABs, which will be ready-to-drink green teas, and carbonated soft drinks, as well as drinking water. Then last but not least, the food and restaurants segment. If you look into this chart, you can see that the alcoholic beverage, which comprises spirits and beer, actually contributes 87% to its top line, and they are the main or the only positive contributor to its bottom line. So let's take a look at how alcoholic beverage is going to boost its bottom line to grow 8% every year for the next 5 years. Firstly, we see that the demand for alcoholic beverage is going to grow going on. This is due to its ongoing effort to premiumize its product offerings. As you can see from this chart, as you can see from this figure, it has been continuously move up the value chain since its listing in 2006. And the most notable one will be the Chang Beer makeover in August 2015. So what actually happened back then? So ThaiBev actually repackaged its Chang Beer and consolidated its Chang products. Now we no longer see Chang Light, Chang Export, or Chang Draft. All of these products are consolidated to Chang Classic, and they have repackaged from the amber bottle into this current emerald green color bottle. By premiumizing this Chang Beer, it actually brought its pricing to be in par with its competitor, the Leo Beer. Currently, Leo Beer consists of about 50% of market share, and Chang actually consists of about 40% of Thai beer market share. But prior to its premiumization, it actually hover about 30% of market share. Just by its single move of repackaging and reimaging of Chang Beer, it actually increased its market share to about 40% just within 3 months. And this is all despite about 10% price increment. So now Chang Beer, although is at about 40% market share, the management actually told us that it's now ranked as #1 as a top of mind beer brand from its recent market survey. So this market survey is actually a leading indicator of its brand equity. So moving forward, we are positive that the group could actually achieve being the leading beer producer and distributor in Thailand by reaching at least 45% of market share by 2020. So just to backtrack a bit, this market share gain is actually coming from its competitor, Leo Beer. So currently what Bunrod, the producer of Leo Beer, is doing is that they are trying to gain back some market share by aggressively marketing on Leo Beer. But as mentioned just now, Chang Beer is ranked #1 as the top of mind beer brand at the moment. Secondly, in near term, we'll be seeing some recovery in consumer sentiment. And as you know that consumption of beer or alcoholic beverages actually runs in tandem with consumer sentiment. In late last year, about October 2016, we see the death of Thailand's king actually brought down consumer sentiment. They also brought down the consumption in alcoholic beverages. However, and due to this incident, Thailand actually announced about 1 year mourning period. They actually banned or toned down a lot of festive celebration, hence also consumption of alcohol within the country. So post mourning period, which would be ending by October this year, we also be expecting that the coronation of the new Thai king, which coincide in October this year, should boost or we should see some uplift in consumer sentiment and hence spending on alcoholic beverages. We also expect that there will be a recovery of a much broader Thai economy on the back of improving regional trade as well as farm income. As you know that agricultural sector is a very important segment in Thai economy. And by when we look into the Thai's purchasing power, we'll look into the farm income of Thailand, because 1/3 of Thais are actually working within that sector. So we are actually seeing improvement in exports. There are also improvement in agricultural production as well as prices, and as well as recovery in tourism sector. All these are actually pointing towards a much more balanced recovery in Thailand. Even the official forecast for Thai GDP growth actually popped up from last year's about 3%. So we believe that with this positive momentum to extend from 2017 into 2018, we expect the spirits and beer EBITDA to continue to grow with 4% and 6% CAGR over the next 5 years respectively. Nonetheless, let's look into the less implicating segment for ThaiBev, the non-alcoholic beverage segment. So we also be seeing a much greater contribution coming from the NAB segment. This is actually in line with the rising affluence within ASEAN region. So with this, we actually identified 3 key factors that will lead to ThaiBev's successful market penetration in ASEAN. Firstly, it will be on similar socio-demographics trends. Within the 600 million population and still growing population within the region, they actually have also similar trends of urbanization, rising purchasing power as well. So this will actually support the demand for alcoholic beverages as well as non-alcoholic beverages. And it's actually partnering with its associate as well as subsidiaries, F&N, Samsung, and Oishi, to distribute to all parts of ASEAN. They are also sharing production facilities, and at the current capacity, there's still plenty of room to meet this growing demand coming from this region. And we also see that the business model is actually scalable. It can be replicated throughout these ASEAN countries. So ThaiBev, as well as FNN, are actually focusing on the fast-growing CLMV markets, as mentioned just now. Secondly, let's look into the margins expansion, which would also helps to boost its earnings growth. In near term, we'll be seeing that there will be an impending excise tax hike in September this year. So, excise tax is actually the highest cost component for alcoholic beverages. It actually accounts for about 53% of spirits revenue, as well as about 59% of beer revenue in last year's financial year's revenue. And historically, the Thai government will review and increase their tax policy in alcohol every 2 years. And since the last revision in 2013, it has been 4 years, and they are currently trying to restructure. They are sorry, let me backtrack. They are actually reforming their tax policy. So now the excise tax for alcohol is not based on the last wholesale price. It will be rebased into the last retail price. So this actually is a move for the Thai government to protect their local beverage producers. And historically, with every excise tax hike, ThaiBev actually had a strategic expansion in their margin. So what do I mean by that? Let's take a look at these two charts. Yes, with every excise tax hike, we see there's a dip in sales volume. But we also see that there's that ThaiBev actually took the opportunity to increase their gross margin by passing on all the additional costs to its end consumer. And in that sense, most of the times, we will not just pass on 100%. It will pass on more than 100%, meaning that it will increase the sales price for alcoholic beverages more than the increase of excise tax costs. So with that, in the incoming September excise tax levy, we expect there will be a slight drawback of sales volume, but we also expect that the gross margin for its alcohol beverages to at least sustain at the current level, if not an uptick in the gross margin. Secondly, we'll be seeing margin expansion coming from an improved economies of scale, a better production facility sharing with FNN, Samsung as well as Oishi, and much more synergies coming from these companies within its group. So, for example, its strategic alliance with FNN. So together, combined with FNN, they're actually one of the largest and most extensive distribution and bottling system within the Southeast Asia. And with that, management actually targets to turn around its NAB segment by FY18. The third key investment thesis will be on FNN consolidation. So this is a chart where I depict the current shareholder structures of ThaiBev, as well as the overall view of the Chowran Empire. So these holding companies includes TCC Assets Limited, Sriwana Company Limited, and Group Limited. So TCC Assets actually doesn't have a direct holdings in Thai Beverage, but Sriwana Company and Group Limited does. Notwithstanding that, TCC Assets actually has about 59% stakes in both FNN and FCL, while Thai Beverage has about 28.5% of each as well. So in order for ThaiBev to move towards its Vision 2020 in becoming the leading total beverage producer in the region, it will be divesting its FCL stake, which is a non-core operating arm for him, as FCL is actually a property business. So what will happen, and what management has actually guided, is that there will be an asset swap within this group of holdings between TCC Assets as well as Thai Beverage. So Thai Beverage will be divesting FCL in exchange of the stakes of FNN from TCC Assets. So eventually, this would actually move ThaiBev one step ahead in materializing its Vision 2020 with the non-alcoholic beverages to contribute over 50% of its group revenue. So currently, the NAB contribution to the group's revenue is actually about 28%, and if post-consolidation, it would actually increase to about 44%. So how is this asset swap is going to happen? We actually identified two potential scenarios that could carry out. Firstly, would be that FNN to buy the entire, ThaiBev would buy the entire 59 stakes of, let me rehash. So ThaiBev will buy the entire 59% stake of FNN from TCC Assets. But as you can see that there's a 470 million cash difference in market value in both difference in the assets. So ThaiBev would have to fork out another 470 million in cash in order to purchase the entire stakes that TCC has. Nonetheless, ThaiBev has actually plenty of room for borrowings with this low gearing ratio at about 0.5 times. This will eventually increase ThaiBev stakes in FNN to about 88%. So this actually could lead to another potential privatization opportunity. So if ThaiBev actually reached the 90% ownership threshold, ThaiBev could actually exercise its right of compulsory acquisition to acquire all the shares of FNN. And that will require FNN to fork out another 412 million to fund the acquisition of remaining stakes. However, if we look at the second potential scenario that could play out, is that ThaiBev would only use the share sale proceed to swap for an equivalent value of stake in FNN. So with that, it will lead to an increase of ThaiBev stakes in FNN to 74%, and the group might utilize its capacity for that capacity for other inorganic for other inorganic growth. So what type of inorganic growth that we might be seeing in a near-term future? We have identified one potential M&A candidate, which has been long-standing on the table, and that would be acquisition of Sabeco. So successful acquisition of stakes in Sabeco will actually provide a long-tail catalyst for its earnings growth in coming years. Sabeco is actually Vietnam's largest brewer by sales, with about 40% market shares. The other two larger market players would be Heineken and Habeco, which has about 20% of market shares each. So why Vietnam? So as you can see from here, Vietnam actually is the largest alcoholic beverage drinker within the region. It also has a high population. It also has a dense population within the region, and as well as a relatively high population growth. Vietnam's Ministry of Industry and Trade actually also projected a long-term growth in beer production in Vietnam. So it will grow by 4% every year for the next 5 years. So we deem that this would be a strategic move for ThaiBev to tap into Vietnam's ballooning demand for beer. With that, we actually we employed sum of the parts valuation, where we come to a valuation of $1.05. And this would imply a 15% upside compared to the last close price in Friday, which is 91 cents. We actually took a few forward EV/EBITDA multiples to come to our conclusion. So we took a slight premium for the spirits multiple, given that it has 90% market dominance in Thai spirits market. Then for beers, the NAB segment as well as food, we took the global or local peers average. And if you look at its historical PE ratio chart, ThaiBev is actually currently trading at a trailing PR of 23 times. So it's roughly about one standard deviation from its last 1 year PE ratio. And if you look further back to 3 years ago, as compared to 3 years ago, you can see that there's some re-rating when market reacted to the impending corporate restructuring. Sorry, there's some typo here. And if we compare to its peers, ThaiBev is actually currently trading at a discount to its peers average when we compare to its respective segment. And our sum of the parts target price of $1.05 actually implied a 23.5 times and 22.5 times FY17 and FY18 PR respectively. As for the key investment risks that might affect our valuation would be firstly, and the most importantly, would be ThaiBev being unable to fully pass on the additional cost to its end customer, which would lead to a margin compression. Secondly, would be on regulatory risks in operating countries, especially on licensing matters. Thirdly, would be on political uncertainties, especially in October after the coronation of the new Thai king, and which would also kickstart the elections. This could dampen consumer sentiment and hence spending on alcoholic beverages. And last but not least, a prolonged weakness in the economy as well as demand after the morning period. So just to recap, we have an accumulate rating for ThaiBev with a target price of $1.05. And this would stem from the 8% earnings growth. We also expect there will be a margin expansion, and it would benefit from the impending corporate restructuring of FNN and FCL by September this year. The potential upside re-rating catalyst would be the M&A deal in relation to tobacco. With that, I would like to also provide some update to our Singapore strategy. Roughly, we have not changed our STI targets, and we have not changed our sector weightings. We remain overweight on property sector, and our topics remain as Capital Land, Chip Eng Seng, Cinemas Land, and Vlog Properties. We also have a buy call on sustainable yield counters, which are Asian PTV and Mapletree Industrial. So with the update mainly came from the macro events that happened last week. So we see that the low rates and big inflation remains, and there's a significant rebound in USD yields. There's also no inflation in sight, which is actually in line with our July monthly strategy report. And the last company updates that we saw last week is coming from Sembcorp Industry, where there will be a de facto power tariff hike in China, and a possible year-end coal pass-through. So with that, we would like to open the floor to any questions regarding today's webinar. Regarding regarding the sorry regarding these slides on Singapore Weekly Update, do note that this is actually a typo. It's overweight property because of supply is actually at 10-year low and demand is actually up 50% year to date. Sorry, the underweight actually is meant for finance sector. So the reason why we are underweight property as well as overweight REITs is because of the lower rates and weak inflation. And in particular for finance sector, we have a reduced recommendation for all three banks. And banks have already re-rated over expectations of higher interest rates and improvement in bad debt provisions. Sorry. Is underweight finance. Sorry, this is a typo. So underweight finance and overweight REITs due to these two reasons. There's a question that whether there's any withholding tax from the dividend distribution. Yes, there's actually a 10% um, dividend taxable coming from the Thailand's side. I'm sorry that there are quite a lot of queries coming from these slides, but unfortunately, that the analyst who prepared this slide is not around. That's why I actually just read through this slide. But thank you for your queries. If you would like to know more, please email to us. We'll provide you much more clarified answers when the analyst is back. Please email us to research@phillip.com.sg. Thank you. With that, we would like to end our presentation for today. Thank you for tuning in and hope to see you again next week.